Good morning. Hopefully you guys are doing good. This is Matthew Mickey from the Daily Profile, doing my Wargaming for December 3rd. And so, yeah, let's start with the daily chart. We see that we're above previous month 50%. We're above previous month NMP Friday. We expect 70% of green candles on the daily chart versus 30% red. We expect the edge that gives us is we expect close of the days at 18 to 1900, 03 to 04, or 9:30 to 10:30. Now these low of the day and then closes in the day, high days. And we know that that's across 20 years of generic statistical data, right? Now, what we will go into now is using something that Mr. T Trades promotes, and we built software around it. If we take based off of Monday and Tuesday, what price did, right? We can get a probability and a percentile of where price is going to go from a historical standpoint, right? So we can see that Monday was red, Tuesday was green, close above the high, right? So we can come into our software and we can say, I've got way too many things opened up. Let's close some of these down. All right, let's go with this one. We're going to choose the NASDAQ. We're going to use the daily chart and just 3 candles. We can go all the way to 6. I just like doing it with 3. We can see that Monday was bearish, Tuesday was bullish, and that Tuesday closed above the high, right? Now we know we've already taken out this high. Before we took out this high, it had 82% probability of being taken out. Now that we've taken it out, right, we knew that before market opened at 1800, that this had an 82% probability of being taken out, and this at 11%, right? And the only thing that shifts those probabilities is if we lose the opening price during the day, right? So now what we can do, because we've already taken out this high, so that edge is no longer there, right, is we can look at, we took out this high, ta-da, right? And then we can start paying attention to where the probabilities are for the close, right? We can see that today's close price, there's a 54% probability of closing above previous day high, right? There's a 98% probability of closing above the low, right? There's a 62% probability of closing above the previous day close price. So put in the highest probable close price between previous day high and the close of yesterday. And then there's a 94% that we close above the open, right? That's all fun, right? But how far, since we know that the higher probability is above previous day high, how far, right? How far? So this yellow line will represent, the previous day high that we've already taken out. These little green dots are under all these scenarios, all right? How many of them, how far do they go before they suck back into the range, right? This first line will represent the 30th percentile. This green line that says median will represent the 50th percentile. This green line will be the 70th percentile, and this will be the 90th percentile, telling us that before we get to this line, 70% of the time, the data reversed by this level, and 90% of it would have reversed by this level. So I like to use the median to the 70th, right? So we can see the median. Well, first and foremost, we can see the 30th percentile has us moving 0.29. So let's go draw 0.29 of a previous day high, and we can see it's right there at the bottom of this green box. We can see that the 50% percentile is at 0.48, right? So now we can come over here and draw 0.48, which is right around here, right? And we can see that the 70th percentile is at 0.82. So right around here. So when I look at this, I know that we can look above it and suck back into the range, but majority of the data still has it going higher, right? Before we do that, 30% of the reversals happen between previous day high and this low part of the box. 50% of the time is this box to this low, right? Meaning at this box level right here, the top of it where my pointer is pointing to, that 50% of the time we reverse before hitting this line. And then this is the 70th percentile there. So we now have targets. Now, let's say we open up, we reverse, and then we start sucking in, and then we lose this opening price. What does that do to the data? Right? Well, we can say, hey, right? We started closing below the open. We made the low below the open. All right. Now you can see the probabilities of the close significantly decrease from that high, right? You can see that the low isn't too much impacted, right? So it went from a 93% probability of being above, 93% of not being able to take out previous day low. And then once we take out that opening price, now the probability shift to 48. And this phenomenon works on the 1 hour, the 3 hour, the daily. Like we have all the time frames from 15-minute all the way up to monthly, right? And it works the same edge there. Now there are some unique factors that happen with how we close and all that shift probabilities, but like this is my wargaming, not my class, right? So that's what I'm seeing today. This is the highest probable area that we get to, right? And then we've already taken out the highest probable previous day high or low. All right, so now moving on, right? From a weekly perspective, right? We know that we've already hit the 50%, which had an 86% probability. We've already hit the 1%, which had an 80% probability. We've already hit the 1.5%, which had a 75% probability. We've already hit the 2%, which had a 69% probability for the week. And now the next one up is 2.5, which has a 59%, right? So we're trying to see, right, that we're closing above. Once we leave this Tuesday range, then I lock this in as the low of the week, right? So that's where we're at with that, right? So what that means is, like, doesn't mean we can't come do a Wednesday retrace of this Sunday opening range, right? 18 to 1930, but it means that more than likely this is the low of the week, right? All right, moving to this now. So candle science we use to put probabilities on open, high, low, close scenarios. And then the daily profile, we say, what did the Tokyo markets do? We use fixed constant ranges, so 18 to 1930, 230 to 330, 730 to 830, and then the afternoon one, 1130 to 1230. And that way we can measure the in-between, the variable phase, right? And so what we can see right now is Asia went long true, London went short true, so kind of contradicting, right? And then we still haven't got a breakout of the 730 to 830 range. So now we're going to have to war game 4 possible scenarios. We know that one scenario between 830 and 1130 is we can go up, break out to the long side of that 730, then go down. Or we can go, so that's scenario 1, we can go up and stay above this low by 1130. Because we don't have a direction, now we have to add the other 4 possible scenarios, which is we break out to the short side first and then turn around, or by 1130, or we just stay below this high by 1130. So we're going to war game all 3 of them because it hasn't done it yet. Now, since we have a bullish take, right, from the candle science probabilities, right, and we are below, this price is just heading lower, right, we can expect short, right, but we're going to war game all 4 of them. All right, so let's go into our wargaming. You can see I put long true broken for Asia, short true broken for London. I haven't selected anything for New York 1 or New York 2. Now we can see long true would be if we broke out to the upside of the 730 to 830 and couldn't take out the low by 1130. Long false means we broke out to the upside first and then take out the false. Short true is that we broke to the downside first and could not take out the high of the 730 to 830. And short false would be we took out the low of the 730 and then reversed, right? Now we can see, just looking at the probabilities, there's an 18% probability of long true. right? There's a 37% probability of a long false. There's an 8% of a short true, and there's a 34% of a short false. So we know just automatically that the false is, right, the reversal, whether we break out to the downside and then go up, or the upside then to come back down, is higher than just starting a trend and not taking out the other side of this 730 to 830 box. All right, so, right, let's start with going short, right? So we see that P12 mid got breached, P12 high has not been hit, and P12 low has not been hit yet, right? We see that if our current high day, low day is at midnight, 0.26 off of Globex open, and at 1925, 0.14. Right, starting with long true, we can see that there is data to support that low of the day right here, right? But there's more data to put a low of the day in between 8 and 8:15. Well, we did not do that. Or like the least amount of mode data is from 16 to 16:15, right? So we know that the current low of the day for a long true is legit from a time and price standpoint, right? And so how do we determine if that's what we're going to do? Well, we teach something called the four-step reversal that we use between 9:30 and 10:30. And if we can't get that four-step reversal to turn this thing false and we break out to the upside, and we can't even get below 9:30 or 9 o'clock's 50% or 10 o'clock can't take out 9 o'clock's low, right? Then we know that more than likely it's going to be a long true, and any trades that we took off the open that supported long, so we should hold runners or add to, or and we can expect the body of the daily candle to be green, right? And we should target longs and not shorts, buy the dips, not sell rips, right? Now we know that that is the lower probability, right? It's 18%. And if we just looked at it from a long perspective, right? If I select the long right here, right, I can see that there's a 67% probability of a false versus a 32 of a true. So that's 32% of the time that true played out when we broke out to the long side, right? So we know that that's not the highest probability. Going back to wargaming, right? So if we break out to the upside, we're going to look at the higher probability if we break out to the upside, which is a long false. Right now, what this is telling us that there is no real data. There's a little bit, but not really any data to support that midnight high of the day that we currently have, right? Midnight 15, right? So, right, we can expect a new high of the day, right? Where's the two places that we can expect the high of the day? And just looking at it, you can see, based off of all these that we look at, let me get rid of this so we can see all four scenarios. We can see all but one supports a new low day and high day after RTH. The short true is the only one that supports a high of the day before the RTH open. Going back to the long false, we can expect a new high of the day between 9:45 and 10:15. And then if that's the high of the day, we can expect the low of the day, the highest probable low of the day, to be the end of the day, right? Or because you got contradicting data with low day, high day, right? It's going to make a low of the day. It's going to go long, false, and then do an instant recovery. And then we'll spend the morning and the afternoon session heading towards the high of the day. And that's where knowing how to read a live market is hell of important, and more important than knowing how to read statistics by itself, right? All right, so moving on, right? The next scenario that could play out is a short true. Now that means we broke out to the bottom and we can't get to this high by 11:30. We know that this is 8% of the time. This is the lowest of the low of probabilities, right? 8% of the time this has happened. It supports, right, and does have some data to support that midnight. But the highest probability would have been a 3 o'clock high of the day, right? And then you can expect, right, for you to start putting distribution in between 3 o'clock to 9:30 to plant a low of the day in the late morning, if not within power hour, right? So we know that one That's what that scenario supports, right? So that means, like, same thing, if we break out to the downside and we can't get back above 930, if we can't take out 9 o'clock's 50%, if 10 o'clock can't take out 9 o'clock's high, right, then we know that it's giving us the live price characteristics of being a short true, and that we are in the red candle, and we're just going to have to accept this is the high of the day and sell rips and turn on short systems, right? The fact that daily momentum's up, 4-hour momentum's up, 12-hour momentum's up, all the momentum's up, like, we know that this would be buying a reversal, and you have to incorporate, or selling a reversal, right? You have to incorporate more steps when trying to find a reversal to ensure that you're not fighting against momentum, right? We do that through the 4-step reversal process, right? And then the next one, which actually is a bullish support, is if we do short falls, right? Like, we come in here, we make a new low of the day, right, between 9:30 and 10:15, and then we plan a new high of the day towards the end of the day. Now, these are the fun days when they're clean, but this one also, so this one and the long true supports, the bullish intent that we're seeing from candle science, right? So from 9:30 to 11, we make a new low, then we take out the high, and then we range a little bit, and then we end the day making a new high a day, right? So what I'll do is I'll be patient and wait for the breakout before making decisions. We break to the downside, I know I'm going to be looking at settlement right here as a probability to see if we're going to net from it. Are we going to net from here, P12 mid, to continue higher, right? Or are we going to net where Globex open and settlement is, do a complete gap fill for today, and then head higher? Or do we need to make that low of the day, which supports a short false, which is the highest probability, to head higher, right? All right, so let's go look at those probabilities for that, right? Let's turn off all of that, and let's just go look at, based off of what Asia did, based off of what London did, right? Because we haven't broken out, we still have to consider all 4 possibilities, right? So we can see on a Wednesday, our 25, 50, 75, and 100% gap fill has above average fills, right? Which supports us coming down to do settlement fill, right? Previous day mid has only a 50% probability. P12 low has an 82% probability. So this supports that low of the day, new low of the day to make a new high of the day thesis, right? Along with the midnight, the settlement, the Globex open, the RTH gap levels, like those all support, right, a drop to recover, right? Because we're above previous day mid, right? We know that, like, this is still a sign of strength based off what we talked about with candle science, right? It's okay to come to previous day mid, right, and then bounce, but it's not the highest probability, right? Remember, the highest probable close for today is right here between previous day wick and close. The highest probable extension is up here in this green box. And then from an intraday perspective, the highest probability is to come down, which is not that far away from where we currently are. Oh, it's 67 handles. So it looks extreme because we've had a low range and overnight, right? And then they recover it, right? So that is what I have. And so I'll trade my 930. If 930 gives me a sell, I'll take cash flow and sells. But I'll be looking for the 4-step reversal to be able to start positioning in for a new low of the day and to try to ride it up for extended cash flow targets. So that's what I got today. Hopefully you guys have a great trading day. If you have any questions,